Okay, welcome back to Rockstock Channel. It is Friday, August 4th, and we're here with Rodney, and David Deckelbaum of TD Cowen is back with us. The focus of today's podcast video is the quarterly results of all lithium companies that have produced. The ASX companies. A number of them have reported, Core, Pilbara, IGO, Minres, Allkem, and then Albemarle and Livent just reported yesterday. Before we begin, just want to thank once again our sponsors, Zelandes, as well as Lithium Royalty Corp. I'd also like to thank all of our $10, $100, and $300 Patreon sponsors. We'll tell you a bit more about Lithium Royalty Corp as well as Zelandes later. David at TD covers Albemarle, Livent, Allkem, Piedmont, Lithium Americas, as well as Lithium Royalty Corp. So he can speak specifically about those on which he has recommendations. Rodney will speak about some of the others. We don't recommend stocks. Nothing on Rockstock Channel is financial advice, but there's a lot of information out there, and we're going to discuss that. Before we do that, I just want to remind all of you listeners, if you haven't already registered your email for RK Equities, Lithium Bull, and other stuff, go to rkequity.com and put your email there so you can get all of our content in a timely manner. Upcoming Lithium Bull will be out in the next kind of couple of days, which will include an excerpt of Rodney's proprietary research on the quarterly results. We'll talk a little bit about this now, but if you want the full research, you need to sign up as a Patreon sponsor at the $100 tier. You can go to patreon.com/rockstockchannel to do that. And in addition to proprietary research like Rodney's, we are having our group Patreon call on August 24th for all Patreons at that $100 tier level. So if you want some kind of dialogue direct with Rodney and me, I encourage you to sign up for that. So, Rodney, why don't you give a quick overview of all of the companies I just mentioned, largely the ASX spodumene producers and some of the chemical producers. Oh, by the way, one other thing I'll say is that the lithium scoreboard I just published yesterday, there have been a couple of movements there into producer category, including Lithium Americas, which is now producing out of Caucharí-Olaroz. Piedmont and Sayona were moved, I think, last month, but they just announced their first shipment, and Core as well as Sigma have announced their first shipment. So we put them in producer category, but these companies are now going to be revenue generating. And Core has seen actually a little bit of an underperformance. Rodney, maybe why don't you start with that, because Core was the first one out of the gate, and then we could talk about some of the other ASX spodumene producers.
Sure. So Core had some recovery issues. They were below expectations. There's also some ROM stockpile issues as well in terms of feed through. So they are supposed to be at some point reach nameplate, I think of around 175,000 tons. That's not going to happen. It's not going to happen. It isn't going to happen in this coming financial year. Bear in mind, Aussie is June to June is how they sort of do it. So 1 July to June. They are going to be 80 to 90,000 tons, I think, this year with slightly higher sales. And then in the financial year 2025, also going to be light. So a couple of things have popped up. What does it mean that you're dealing, I think, with finer grain material than they thought in the definitive feasibility study? We'll wait to see. I don't know if it means flotation, but it was a surprise. The one thing, Howard, that I picked up in their quarterly that kind of threw me is in the Northern Territories, the royalty is substantially higher than it is in Western Australia. So basically they have a formula to allow for costs and so on, but they take a 20% royalty off the costs, which comes out to roughly a 10% top line of revenue. So that's literally double Western Australia. We haven't followed Core that closely. That was a bit of a surprise. Bottom line, Core is not going to be producing in excess of what our forecasts were. They're going to be slightly light. If we move on from there, IGO, cover them because they give some good information and look through to Greenbushes. Greenbushes production was slightly higher than expected this quarter, but also to do, I think, somewhat with pricing for the quarter that was set. Their forward projection for the next financial year is largely flat, which is below what I expected. And the other, it wasn't a surprise, but it was to some extent on the downside, was Kwinana's production of chemicals was low, to say the least. So there definitely seem to be some issues there. And of course, if you're not producing lithium chemicals, you don't need the feedstock. So that means any spodumene, excess spodumene, has to go somewhere. So I guess that's going into the market and being sold because Kwinana doesn't need it. I don't know how long that's going to take to fix, but definitely a problem. On the same theme, if we move over to mineral resources and Albemarle on the JV, Kemerton also below expectation on production. I'm sure you've got some commentary to chat about that, but Mineral Resources has now essentially said they want out of all downstream. They're getting out of Kemerton and they're getting out of the two Chinese plants, and they are going to look at a midstream sulfate and possibly tolling. The production at Mount Marion pretty much in line and expected there. The production at Wodgina actually slightly below, was down quarter on quarter again, not needing it for the downstream because that is underperforming. So I don't know how that discipline will go, and I'm very interested to hear what you two have to say about where Wodgina's volumes will go to in spodumene from here. Then Allkem, Mount Cattlin, that was better than expected from a spodumene perspective, and they've also done some work on trying to extend the mine life. We'll see how it goes further. The outperformance in terms of effective LCE tonnage is quite low, so not a huge issue. The thing is, though, is that and their carbonate from Alros was good, but Naraha was an underperformer again. So again, reiterating on all three, Kemerton, Kwinana, and Naraha, below expectation volumes. So there's some work to be done there to build that up, which means, again, their carbonate, if you don't need it at the hydroxide plant, you're likely to be selling it to third parties.
And what about Pilbara and also AMG? I forgot to mention AMG.
So AMG is not an ASX, so I don't know if you want to do it now, but Pilbara did well. They were ahead. They're kind of in line with my SC6 equivalent for the full year. They definitely beat, but again, translate that tonnage into an LCE effective downstream, and it's not a meaningful number away from our forecast, but they are doing well and tracking ahead to do the expansion. So if I remember correctly, Howard, he said full steam ahead was the quote on the call. So they definitely seeing demand. And if we look just overall, LFP cathode production in June was up. If you look at battery cell production for the first half of the year, great number. China up 43%. And if you look at some of the forecasts, they're expecting to see quite a bit more in the second half, and sort of EV cells, what Albemarle is saying. So I'm not surprised that he's saying, full steam ahead, because I'm expecting quite a big uptick in volume and, of course, demand in the second half of the year based on those numbers. So Pilbara good. If we want to cover AMG, again, there's some timing. They are pretty much tracking exactly as I had them at. The only thing was pricing was slightly lower, but we've seen spodumene pricing drift off between 3 and 3.5 looking at the latest numbers, but I cannot see, looking at battery cell production, unless there was an enormous amount of cathode buildup and lithium inventory wherever in the system, that we're not going to see an uptick in demand in the second half based on EV forecasts and on battery cell production. So at some point after the summer, my guess is buying has to resume.
Right. Okay. AMG actually lowered their guidance and the stock got crushed. Core underperformed and the stock got crushed. Pilbara, Minres, IGO, they've been, flat to slightly down. The market has been generally weak with lithium prices a little bit weak. Also, I don't know if the rise in interest rates of the 10-year and 30-year in the U.S. Because of the Fitch downgrade is somehow having, some sort of like derating impact. David, maybe you have some view on that. But just to summarize, Rodney, do you think that the hydroxide underperformance, at Kemerton for Albemarle, at Kwinana for IGO and Tangxi, and for Naraha at Allkem, and as a result, spodumene and carbonate, tons are being put in the market. Do you think that this is maybe having, a depressive effect on the prices in addition to, Sigma, Piedmont, and Core's new tons coming to market?
Yeah, I'd say it's not a material number. I think somewhere in the system, someone's playing a dangerous game, not restocking, is my guess. The only thing I can think of, these numbers, Howard, on balance, they're kind of neither here nor there in terms of total numbers. The question is what's coming out of Africa, what's being produced in the China brines this year because they're in summer, and what is happening in lepidolite. But I wouldn't say that the tonnage coming from those that you mentioned would be enough to do something. It just feels like the guys are holding back as long as they can, thinking material is going to come. But again, as I say, if I look at second half demand across and expectations of production, I can't see how they can hold off. The other one we haven't chatted about is Sigma, and it's funny because I'm going to claim it because in my models I had exactly 130,000 tons as an estimate for this year, and they're saying 130. So my haircutting or estimates on them was spot on. They are slightly more optimistic about what they'll produce next year than I am. We'll see how they go as they go to full ramp, and then another step up. But if you look at these, in the end, the key ones are Greenbushes, Wodgina, and so on. It's not these new ones are, and there's sort of uptick from Pilbara, and then that's not the big swing factors here. So if we think about an overall market that's going to be nearly 1 million tons this year of demand, so I'm expecting at some point they can't avoid stepping up and buying.
Okay. The outlooks that Pilbara gave, Mineral Resources, I listened to Chris Ellison for an hour and a half, fighting analysts and other commentary. It was very entertaining, but Allkem, all of these guys are painting, and David, you could speak about Albemarle's, bullish outlook, but they're all medium to long term, all systems go in terms of, making capital investments to meet demand, interfacing with OEMs and battery customers more and more. Mineral Resources emphasized very much in the restructuring of the Albemarle that they wanted control of their own rock, and they want to redirect some of that out of China into the US and Europe, and they are having dialogues with auto OEMs directly. Albemarle and Livent both signed deals with Ford directly, which again, David could talk about. But Pilbara made a comment that the auction that they're now having for their 300,000 tons of spodumene supply, they want to integrate kind of downstream for that, compared to when they did this in 2017, and POSCO had them over a barrel, right? POSCO cut a very good deal, with Pilbara. Now Pilbara is going to cut an extremely good deal with, I think they have 70 people in the mix. As I understand, there was like a first pass in the Macquarie process, and now they're going to narrow it down over the next few months. But I think Pilbara is going to get a very good deal with, the auto OEMs or some of these, merchant converters that don't have, spodumene supply there. So the demand is very strong, very good, medium to long term, but the equities aren't reflecting this. And we talked about this actually when we presented at Fast Markets, the seasonality, and we had the last time we had a roundtable July 4th, the Declaration of Independence we did on the Twitter Spaces. We talked that the summer could be weak, and it's a great opportunity to be picking up some cheap stock on an expectation that you'll have a lithium price recovery and you'll have a lithium equity recovery, into Q4, into next year, the September to kind of January, February timeframe.
I mean, I think the one thing you've got to look at is that's important is if you look at where battery production capacity utilization is at, it crept up last year, but it's back down again in the 60s, I think. So there is cell capacity to up production, and LFP cathode capacity has been expanding as well. I'm not sure if it's as much on the NMC side. So what I'm saying is the downstream, as long as there is demand, and EV production capacity is also improving. I'm not sure it's exactly on track, but it's improving. So my point is, unless there's an economic headwind, the system can take more material into the cathode and into the battery cell to take the next leg up of sales. So there's no pinch points looking at downstream from here, in my opinion. David, do you agree?
Yeah, I think that there's a couple things, right? Is earlier in the year, right, we were all overcome with this destocking thesis, and then there was this brief restocking period. And I think we saw EV sales pick up dramatically in China in June, and then they've tailed off in July. And I think we've also seen a tail off, obviously, in North America and Europe. So now there's just this debate. I think when you look at upstream inventory levels, those numbers have come down, every single month since March. I think the amount of lithium inventory that's held downstream has also whittled down. But then there's this other function, right, where the amount of cell inventory held at gigafactories in China, I think, sort of reflects the fact that you're operating at low utilization levels right now. You have an adequate amount of downstream cell inventory that perhaps is a month or 2 months, debatable. But I think on the upstream side, what you're seeing held at say smelters or with lithium companies is really what equates to about a 2 to 3 week supply. So I think suffice to say, like, the market's very tight right now. So if you were to see this acceleration, Howard, you talked about Albemarle's rosy outlook, right? No one's backing off this view that we're going to see a 40% growth rate with EVs this year, which would have us at 14 million vehicles. But that also implies that for the next 4 months, you're going to start to see EV run rates increasing by 20% from where we were, in sort of the June, July time period. If that happens, that's quite like a pull forward on demand. And I think we're all looking at the supply side, which is, for lack of a better term, just late right now to be addressing any incremental demand. So I think you're seeing more volumes obviously flooding into the spot market. I think you're seeing supply from even major producers that was being withheld in the first half of the year that's coming onto the market right now. But it does seem like, unless there is a prolonged demand weakness or prolonged economic weakness, especially in China, going into the end of the year, that those positive forecasts should come to fruition. I mean, we're of the belief that the lithium prices crest above $50,000 a ton in the fourth quarter, and that should lift all equity boats. But I do think, you brought up the point earlier, Howard, of what's driving some of the underperformance here with many of these names, and I think some of it is cross currents from, if you look at the major specialty chemical producers like Dow and others, like, they're all signaling that demand is worse than expected in the back half of the year. Even coming out of Albemarle's, specialty segment with bromine, pointing to weak consumer electronics demand. If you look at other materials outside of lithium on the rare earth side, right, Linus out of Australia talked about withholding some product going into permanent magnets from the rare earth side, because really just the entire industrial equation in China appears to be just moving along at a slower pace than I think people had anticipated. So I think that there is this general approach from all investors, both retail and institutional, of there's a little bit of a wait and see element of does China really pick up in this fourth quarter, because you are seeing regulatory intervention, you are seeing stimulus coming in. Certainly on the commodity side, I follow oil and gas as well. And we've seen expectations that China starts to consume more on the oil side in 4Q, and all of this is just broadly tied to this China industrial machine that is expected to start reaccelerating in the fourth quarter. If you overlay typical seasonality around EVs, that's going to translate into a run here. But I think that's why, and I know Rodney's posted about the CME futures. We talked about the Guangzhou futures starting to trade in the middle of July, and you've still seen like hydroxide futures, right, like hovering in the 50s next year, and I think like that's ultimately like the setup right now.
Interesting. You said a couple of things about rare earths, and the Diggers and Dealers conference in Australia is next week. And I saw someone tweet, I think it was Haplo, that critical minerals, for battery, and just critical minerals presenters exceed gold presenters, for the first time, right? So that's a good, somewhat of a good indication. But I that was the second or third time people said like, oh, lithium and rare earths are hot. Like we just did a video on nickel. Nickel's not hot. Cobalt's not hot. Graphite's not hot. I was surprised to hear that rare earths was hot. It didn't seem to be reflected in MP or Linus's stock price. You cover both of those stocks as well, David. I don't know if you have just a quick comment on that, but then I'd like you to go into the companies you do cover and the research that you published on Albemarle, Livent, Piedmont, Lithium Royalty, and any comments on the lack of separation.
Look, I think on the rare earth side, maybe it's thematically hot right now, because I think if you, and we're getting into like a lot of different topics, right? But lithium and every critical material is always going to command some sort of risk premium because the market is heavily dominated by China. You saw a couple months ago, I suppose, that the gallium and germanium export restrictions from China, which was really a shot at chip manufacturing, right? That's not a read-through necessarily into rare earths or lithium, but I think the broader market is like, well, if China can restrict the exports of one material, what would be stopping them from restricting the flows of other materials? And we don't necessarily have to go into the logic because every material has its own narrative associated with it. But I think thematically things are hot right now, but the markets themselves are not hot. And I think both MP and Linus on the rare earth side characterize the market right now that has been, one, awash with supply that was held back from Myanmar. China receives a ton of feedstock from Myanmar, and that was basically shut down for almost a year just due to some politically sensitive things that were happening in the country. So you've seen this influx of new supply, and then the demand side, rare earth is much more tied to broader industrial activity, things like HVAC, the real estate sector. So if China's not constructing things, if they're not building things, the rare earths market kind of moves more with that. Lithium obviously is going to be much more tied towards the battery side, which is that has actually become, I think, divorced from the broader industrial narrative.
Okay, tell us your thoughts on Albemarle and Livent calls and outlook, and valuations. These things are like at, I don't know, single-digit PEs, not EBITDA, but single-digit PEs.
Yeah, sure. Our view going into the quarter, what we had previewed was that we thought that they could raise their top line or their revenue guidance for the consolidated entity by about 3%. So we turned out to be exactly correct with that. I'm going to pat ourselves on the back of my team. But I think a lot of people expected that because the last time Albemarle gave guidance, they referenced mid-April pricing, which was still at a relatively depressed point in China spot carbonate markets. They marked to market their guidance this time. The way that Albemarle guides, right, is they will look at a reference price at a given point in time and then carry that price through the model through the rest of the year. So they use June 30 pricing, which is certainly going to be up from where we were in mid-April on spot carbonate. I think the market's like obviously become a little bit more complex with the type of indices that Albemarle is using and others. Even Allkem has asserted that they're using more CIF pricing than China carbonate, and that's obviously not the determining factor always of how cargoes are being priced. Not to segue, but I think Allkem, their update as well, like Rodney talked about the fact that they outperformed at Mount Catlin. They outperformed on the production side, right, at Olaroz, and they're ramping stage 2 at Olaroz right now. But they sold a relatively limited amount of those volumes. And part of that, I think, is that they also didn't provide any pricing guidance into the subsequent quarter, which is rare for them to do. They typically will give you a view forward, and they remarked that they were still pricing a lot of their contracts or a lot of their sales for the end of the July period. So I would expect that when you get like their full year update, their annual update towards the end of August, you'll get a better sense on where those recent cargoes sold. But they're bringing volumes back to market right now. So they were certainly still withholding sales on the carbonate side out of Olaroz in the second quarter, or what would be second quarter, their fourth quarter. Back to Albemarle, there were a couple of things. One, we already learned about the mineral resources renegotiation, right, which really leaves Albemarle in the place where they're now going to be 100% owners and financiers of Kemerton and Meishan and Kinsho in terms of conversion assets in China. And now the question becomes, over time, Wodgina was intended to feed all of China on the conversion side, whereas Greenbushes, which is still ramping and actually had a very impressive quarter from IGO, is going to be feeding Kemerton. So I think that there's less of a perhaps concern around how Kemerton is ramping. Everything there is on time with another train coming up and running at Kemerton. I think the question now becomes, we've seen Albemarle out. They made the bid for Liontown that was publicly disclosed back in March. Continually looking at sources, or how do you feed all of this conversion capacity that you're bringing on in China? And I think the difference between the two views, right, is that I think Albemarle has a view with some others that you can feed the European markets with Chinese converted material, whereas perhaps the U.S. markets will need to be fed over time, given the IRA compliance with U.S. converted material. So I would anticipate it's why, we were talking earlier about why Albemarle is looking at acquisitions. I think they've publicly disclosed, they have it in their slide, that they're looking for more resource because they expect to be resource long over the next year and a half until those conversion facilities are built, in which case they want to start matching more resource with the downstream conversion, or midstream conversion rather. So I think as it relates to the quarter, a lot of people anticipated they were going to raise their guidance more significantly around pricing. So expectations were high. And then I think you certainly saw like the inflow of obviously greater ownership around the downstream assets, which translates to higher CapEx. And then you saw a reduction on the cash flow from operations side. So suffice to say, like Albemarle is outspending cash flow right now for the first time in a few years in pursuit of these growth objectives. Their view around the long-term market tightness and what they see as a structural deficit really beyond the 2025 time period, that's unchanged. But I think, the near-term factor is, without a correction on the price side right now, the incremental delta was they're spending more money this year because of this renegotiation of contracts.
So, I mean, if you think about it, David, they'll need about 700,000 tons to feed China, and their half of Wodgina doesn't get that done. I'm not sure what the balancing act is with Greenbushes, but I mean, it makes sense now that they talk about M&A.
No, for sure. And it's something worth monitoring, right? Because the updated agreement around Wodgina with Mineral Resources would still have Mineral Resources tolling their volumes through Albemarle's facilities into China, up until the point where Mineral Resources, I suppose, would build their own conversion facilities.
Okay, before we continue, here's a bit more about our sponsors. Zelandes provides services in subsurface data visualization, downhole geophysics, and other services for lithium brine operations. They just expanded into North America, and no matter where you sit in the brine industry, Zelandes can help you speed up and improve your projects. Go to zelandes.com for more. Lithium Royalty Corp is at the center of a global energy transition and manages a globally diversified portfolio of lithium-focused royalties in electrification and decarbonization. With 32 royalties on 29 higher-grade, low-cost projects from exploration to production, Lithium Royalty Corp covers all the bases with well-managed risk, ESG considerations, and a scalable royalty structure. Lithium Royalty Corp is publicly traded on the Toronto Stock Exchange, ticker symbol LIRC. To find out more about Lithium Royalty Corp, visit lithiumroyaltycorp.com.
So there's going to be a little bit of a wait and see there with how all of that.
Yeah, I mean, it'll be interesting to see how the midstream goes and how that ramps, if it goes that route. The one thing I did want to ask you specifically, David, is Livent. If you look at the carbonate coming online and then you look at their Chinese hydroxide facilities and Bessemer City, I'm struggling with the maths a bit for feedstock.
Right. Well, so Livent reported, Thursday evening, and there really wasn't much of a change to guidance there. And as a sidebar, it would be atypical for companies that are entering into a merger that's supposed to close in the fourth quarter of this year to materially change guidance, unless something really has changed. I think the only real increment that came out of Livent was one. You're not going to see first commercial sales out of the Solar Ombre expansion. They're expanding by 10,000 tons until the fourth quarter. So on the margin, that's about 1,000 tons less this year of impacts to financials. I think the second phase, they're saying all contributed would be about a 10,000 ton increment next year relative to 23, right? But their capacity in theory would be double at 40,000 tons per annum, slightly less in terms of the carbonate to hydroxide conversion. But, I think to your point, Rodney, they just completed the 5,000 ton expansion at Bessemer City. Certainly with the build out in China, I think that there's.
Is this where Allkem comes in?
Well, that's some of the Allkem benefit is actually having some of the excess lithium chloride that would feed into their butyllithium segment that would be helping Livent and some of the specialty products because they've been acquiring lithium metal in the open market. So that's included with some of the synergies that they talk about in that couple $100 million per year eventually, or 175 million per year. I think over time, honestly, because China conversion was so inexpensive for them to build, that ultimately Solar Ombre is going to expand again, and they will feed into that. But having spare capacity in China is not necessarily an overhang for them. And it's not as though these are situations. If you look at some of their new contracts, many of these are taking volumes out of Bessemer City, right? And I think that they're going to be able to satisfy that entirely with feedstock coming from Argentina. And really, the last point on Livent, and we've highlighted the Livent Allkem pro forma as our top idea for this year, most recently. And I think the general view is just the pro forma, right, is one of the only lithium companies like in the public realm that's going to be entirely funded organically through cash flows. You have a number of different growth projects between both Allkem and Livent. And then obviously you have new projects coming out of Canada between James Bay and Whabouchi, which would ultimately feed down to Bécancour and some other downstream conversion. The pro forma there, I think we have trading right now at sub 3 times EBITDA in 2025, where most of the peers trade closer to 4.5 times right now. So we still think a very compelling valuation setup there for the pro forma once that closes. But I think that was the other incremental update from Livent is I'd expect that you're going to see a technical report coming out around Whabouchi in the next few weeks. They updated their capital estimates around both Whabouchi and Bécancour, I think, to be 1.6 billion in aggregate, which is, I guess, 2x from what we saw 5 years ago.
Yeah, that was my next question. Is the 1.2 on the 34 is a number?
Well, we'll see what the technical report says because we don't know if this is apples to apples in terms of what was included with original engineering. But they also did comments that at least they expect their portion to just be 10 to 15% of that in terms of capital. I'd expect that, as we go into the end of this year, we have to look at a number of sources of government financing and offtake partners. That would iterate towards that 1.6 billion total, with also being shared by Investment Quebec.
I wouldn't be surprised if Ford provided some funding as part of that offtake deal, maybe a prepay and maybe U.S. government funding or Canadian government funding. But you mentioned the valuation 3 times 2025 EBITDA. I mean, that's crazy low when I think about, what Albemarle paid for Rockwood back, a few 6 or 7 years ago. These were in the mid-teens multiples.
David, sorry, just what lithium price do you have to come out at that number?
That's a good question, Rodney.
It's about 30, isn't it, or so?
In our 2025, we're at $38,000 a ton.
There seems to be a dichotomy. If you look at Pilbara's valuation, I don't know, it's like $9 or $10 billion US. Sigma, Liontown, these pure play spodumene producers are trading at much higher multiples than Allkem, and Livent. I mean, just think about that. Like Allkem and Livent are each $4 or $5 billion themselves. And that's what Sigma is, and that's what Liontown is. Liontown's not even in production. So is Chris Ellison, right? If you own your own rock, you're God. But Pilbara and Mineral Resources do want to go downstream, right? They want to be integrated. That's the long-term goal. But the market's valuing, the upstream, much higher. And you're getting some pushback from analysts, asking why, Chris Ellison, do you want to move downstream? And he was only talking about sulfate, which is not all that difficult. And he just said, like, he'll just get some Chinese partners, come and build it.
Howard, in fairness, though, I mean, the effective LCEs of those upstream spodumene producers is a lot more than these other guys are producing now, at any rate. So there is a ratio there. I mean, again, they've got to deliver, and Livent's got a growth strategy and so on. But I think, if I'm not mistaken, Liontown will effectively come out at about 70,000 tons LCE when it's up and running fully. What people are saying is, look at all the downstream and look at the hiccups. So what's going to come on stream without trouble versus a spodumene producer, albeit that Core's had some issues. I mean, it seems Sigma's doing its thing. I remember seeing its core samples back in 2019 at Mines and Money and stuff. A great core, and some of the others. So I guess they're saying it's easier to get your spodumene up and running. But I mean, it's while we're on this, and I know we're talking quarterlies, but David, I'm interested to hear your view. We were once, when all of those spodumene producers all came online in 2018 and 19, the margin sat with a converter. Now we're seeing a lot of integrated internal models where there's not a lot of spodumene going to third parties. How long do you see spodumene and the miners taking the lion's share of the margin of effectively is this sort of tolling model and controlling the rock going to be indefinite?
Yeah, it's a good question. I think the tolling model certainly seems to be accelerating. So I suppose that it's indefinite, but I think it's also interesting. Another dynamic too, right, is that a year ago, I think that the common narrative was that the spot market represented less than 10% of global volumes, right? And that number is probably triple today. But again, it's carbonate's going to be influencing how most people, I think, view the markets because that's the most widely available price that we can see on the screen, right? So I think you have that dynamic at work, and then the other side, in terms of how long it lasts, where you would have this matching situation and the margin going back to hard rock, like I would surmise that in our view still persists for the foreseeable future. I think it's one thing to control where everything is going in terms of getting to the downstream and controlling where the flow goes to customers, and ultimately I think that retains most of the margin back on the upstream side.
Well, I mean, that's how Albemarle is kind of positioning. If they make sure that there's no large spodumene resource, I keep saying they don't want rogue tons coming onto the market. So they've not that, I mean, in Liontown's case, I think most of the offtake customers are Albemarle customers, but now you've got Patriot, and that is potentially going to be a very big resource. So they're getting involved there. So it's almost as if every time anything gets to big enough, if you look at the Australians, the next up is Global Lithium, after all the others, everything's spoken for. So it doesn't seem like, it feels as if everyone's looking for some kind of internal solutions and controlling the ultimate destiny of it. And I've said before, David, are your thoughts? I mean, I said, who do we as investors and who does the market want to set the price for lithium? Do you want Albemarle under contract to set the price, or do you want, worst case scenario, a second or third tier Chinese converter with a weak balance sheet who needs to get it off his inventory as quickly as possible and will sell to anyone? I'd rather have Albemarle under contract with a strong balance sheet.
I agree with that, but to David's point, if the spot carbonate now has gone from 10 to 30%, we've talked about spodumene and carbonate being much more commoditized, right? Commodity carbonate, specialty hydroxide. To the extent that I see a derating in the multiples, right, to like iron ore multiples, or what Rio or BHP trade at, and maybe that's because, and you hear it in the commentary, Albemarle and Livent, Allkem, that they don't have a lot of predictability or visibility into their earnings, right? And Albemarle, which has moved, Albemarle like managed their earnings for a long period of time, like every quarter, they were very focused on having high predictability, high quality earnings, and now there's more variability. So if you have more variability in your earnings, the market gives you a lower multiple for that. So that is happening, I think, as part of the market. But at the same time, Albemarle and Livent are still very focused on the hydroxide, in particular for Western OEMs, and that market is still a bit more complicated. Though they should get a premium, for that over time. But anyway, it's still a young market. It's an evolving market. It's confusing, and they can't even predict, right? They don't know. Even Livent yesterday was saying, they have $1 billion, forecast for EBITDA, I think, next year. But he said that's just a guess, right? Their visibility is, he said that we could have super high prices again, and they'll make, some nice money during that time, but just really no visibility. I'd like to comment though on like mineral resources and Albemarle. For a lot of the past 3 years, I've talked about a spodumene duopoly, with mineral resources and Albemarle largely controlling what was happening at Wodgina, and Pilbara controlling what was happening. They mothballed Altura, and that resulted in very high prices. And now essentially MinRes is, they're at pains to say how great their relationship is with Albemarle and with Ganfeng, but they're basically saying that they see value in controlling their own destiny and the rock. And in fact, they're going to be competing with Albemarle. Albemarle has lost half of the Wodgina tons, and I'm wondering maybe that's why Albemarle is being more aggressive, in entering Patriot, and pursuing Liontown, because they need to have additional spodumene resources. But we're moving from the spodumene duopoly to maybe an oligopoly, because mineral resources is a competitor, I think, now to Albemarle. They're going to toll until 2024, but then after that they can go to Ganfeng, they can go to Albemarle, but they can go to Yawa. Yawa, Rodney just sent to me, has extended their agreement with Tesla. They're a qualified hydroxide producer. And there are many others. Everybody's talking about, like, we don't have a great line of sight on the conversion capacity in China, but everybody is saying, like, over the past couple of years, there's tons of capacity there, and they're starved for rock. We're speaking with another client of ours who mentioned that actually the Chinese now, rather than playing the spot market, are looking to have long-term contracts with spodumene producers. And we're very skeptical about that, because a couple of years ago that was the case. Ganfeng had long-term agreements with Pilbara and Altura, but when push came to shove, they didn't adhere to their floor prices. But the body language in a lot of the dialogue with the converters was just like, okay, we don't just want to have this spot market, playing. Let's kind of have long-term contracts. So that, combined with the Pilbara auction, for the downstream being very, buoyant, speaks very well for hard rock specifically. I'd like to also just like shift a little bit. There's been some Rio Tinto mention that they want to kind of get into lithium. Exxon, has been in the press, about that. There was an article on Reuters. This wasn't my takeaway from the Albemarle call, but they said, that they're, doing a pilot plant, for Smackover and DLE. I'm noticing a client of ours, an investment of ours, E3 is at an all-time high. It's interesting that they're at an all-time high. Critical Elements, Frontier, an all-time, not all-time, but 52-week low. E3 is at a 52-week high. E3 has Imperial Oil as a partner and investor. That's Exxon's subsidiary. You're in the oil space. You cover oil stocks, David. Maybe we could just, what do you think about Exxon? What do you think about, DLE plays, the Smackover? You don't cover Standard Lithium, but you cover Albemarle.
On the oil and gas side, it's quite popular right now, I think, to remark that they're all looking at lithium content in produced water, right? So water is a byproduct of any oil and gas well. So this is a product that they have to pay to be taken off of oil sites. So if there is some sort of residual value. And look, it's not just lithium; it can be gold and ammonia. There's a lot of stuff in the water, and so I think. I think that there's that camp, and that probably is going to be very immaterial for a very long time. What Exxon is attempting to do, I mean, they bought Galvanic, right, which is now Salt Works. They've announced, I think, intentions to build a conversion facility. So that those are real dollars at work and a real commitment, and that's going to be, real brine processing. And I think that they all, many of them believe in the oil patch, right? You've seen active companies like Tetra, Schlumberger, obviously Exxon now, that all have a ton of in-house engineers that are working on different separation technologies that likely will be some sort of DLE piloting. And for companies that are flush with billions of dollars of free cash, it's not a bad investment if somehow it works. These are relatively low entry multiples for them, and then certainly having experience in refining is Exxon's core competency. Obviously, that's on the crude side, but having big pocketed major oil companies that are familiar with large project developments, it seems to be a logical progression over time. There's just a question of is the technology feasible, especially on the DLE side for what they're attempting to use. But I would imagine that for now, that's more of like a bullet point than actual news flow. And then the Rio Tinto point, I think we've seen Rio Tinto publicly visible looking at lithium assets, and obviously you mentioned like the Rincon project, which is interesting because that was obviously like a very greenfield developing project that had been on the schedule and had some work done around it for years. So it certainly wouldn't suggest that they're precluded from entering another developing asset that would still be years away from production. And I think you highlighted that they are increasing their presence in Canada. So I think if you were to connect dots there, it would make sense that they would be looking at everything. But I also think there's reasons why many of the mining conglomerates have not jumped at all of the lithium names just yet. You need to have enough relevance, and I think that there's still a view of ultimately what happens to lithium pricing, and is our valuations. We talked about the multiples, but if pricing moves back to this historical range of $20,000 to $30,000 a ton, then I think many of these companies are content to wait.
Yeah, I mean, just on what you're saying there, David. I mean, but one of the things though, it's interesting, Rio's angle with the early stage with the Rincon, and then they've got these exploration assets in Canada. Is where is the expertise? Where is the downstream expertise if you're not going to buy into a big firm?
They got a lot of, PFS work on Yadar. 17 years worth of research.
It's a good point, but I think that there's like a precedent where you've seen in most natural resource companies is you buy resources, and then if your internal expertise fails, you buy expertise.
Yeah, I guess. I mean, look, they need to decide. But again, I was surprised that they would go into something as intricate as DLE as an initial play, rather than sort of moving dirt and going into like a spodumene play and going from there. But I mean, they're trying it now in Canada, so we'll see. The other thing, I guess that, like Sibanye, when they got into Calibre, Sibanye deals with the car supply chain because of their supply of for catalytic converters and so on. So they had contacts and they had a relationship on the commercial side. It'll be interesting to see how that plays out for the other major diversified mining companies if they have those links. But we'll see. But I think it's safe to say, in my opinion, that Rincon's a busted flush. We'll just wait to see that play out. If you take what they paid, take all of the years that they're waiting, how much they pay for the pilot plant, and then put that into production and see, plug in some lithium numbers and tell me what your IRRs are on an after-tax basis. And it doesn't look like it stacks to me, but I guess, we'll have to wait. But will be interesting to see the future moves, because if you think about it, I don't know what the complete number is, David, but if you look, if we say that lithium demand is going to be 3 to 4 million tons, put a number on per ton, how big is that market relative to nickel, relative to copper, whatever? I think it's meaningful enough that if you want to be a diversified mining company, surely that you have to have a foot in there.
I think they'll eventually get there. I've said it all along, though. When Rio buys Albemarle for 100 billion, that'll be the kind of like the Rio Allkem moment when you should be selling all your other lithium shares. But I'd have to say that if you look at strategies of the incumbents, Albemarle has been quite entrepreneurial. They bought for $30 million an asset from Lithium Power that's adjacent to Greenbushes. They've put $100 million on market buying into Liontown. They've now done another 100 million or so into Patriot, and their strategy is very clear. They want tier one deposits in tier one jurisdictions of spodumene, but they're not like doing really DLE in Antofalla in Argentina. So where they have a big resource in Argentina. Rio went into Argentina. There was some news that that Reuters wrote, that the Albemarle is piloting, in the Smackover, but I think I wouldn't read too much into that. They're very, very focused on hard rock in tier one jurisdictions. But SQM is the only one that hasn't reported yet. They're reporting in a couple of weeks. But one thing I would comment, and I think this is something that Allkem or the Allkem Livent merger can do, right? You had SQM went into Azure Minerals, right? They wrote a $20 million check for like a 20% stake, and Azure is now $1 billion market cap, right? Like, so valuation at the end of the drill bit for a discovery of hard rock is that's just amazing. That's just a story. I wasn't tracking that closely, and I looked at it. I was like, oh my God, this thing has really rallied very aggressively. So Azure is another tier one deposit in the making, it looks like, in Western Australia. SQM, invested, as is their want, that they don't overpay, right? Their strategy, they went into Lithium Americas, early, they went into Kidman, they pay cheap. Albemarle, pays, higher valuations. It would be very interesting to see. I think Livent and Allkem, can kind of get into that game of, funding some early stage, juniors with an eye to, finding these discoveries like Patriot, or Azure, before they get to be, too highly valued. David, if you can talk about, Piedmont was your top kind of, small mid cap pick. They're now in production. What's kind of like with Sion is in production, but the maths and the economics, for Piedmont of that offtake agreement are very strong. If you can comment on that, and if you could also comment as well on Lithium Royalty Corp. I mean, I think that went public. It's $17 or $18. It's now at like $12. They have royalties on Sigma. They have royalties on Winsome Resources and a number of others that Sigma's in production. So that's going to be a cash flowing and core. So just if you could just comment on your research on that, and then finally your thoughts on Lithium Americas as well, which you cover, and what the valuation split might be once that happens in October, I think it is.
Yeah, sure. Well, first, I mean, I think with Piedmont, one of the things that we had highlighted at the beginning of the year was just this, really like evaluation arbitrage for the offtake with NAL, and I think that is commendable. We wrote this week with first shipments out, like NAL through Sayana was, I don't know, the first projects to really deliver on time, to do exactly what they said they were going to do this year. So I think that is worthy of at least a golf clap or two. But you have that first 15,000 tons that left the port. Talked about like the next subsequent shipments. I think that Piedmont expects to come in the third quarter here, and then certainly I think the expectation is that Piedmont's share is going to be somewhere in the 50,000 ton range as spodumene this year. If you look at most market pricing, right, be clearing somewhere north of $130 million for that in the back half of the year alone. You go into next year, and just using spot concentrate today, you're at another 300 million, and you look at the market cap today, and you're about $1 billion, right? So you're earning your market cap very rapidly just off of offtake. And then certainly I think it's worth everyone just keeping an eye on what happens in the fourth quarter with Tennessee Lithium, which has received its final permit to effectively begin construction now, which also means that perhaps you're lined up for an offtake partner agreement or another catalyst to just give some greater visibility around financing that project. But certainly finding an attractive partner, the likes of we've seen the Fords and the GMs like signing deals and writing checks, so that's probably worth staying tuned for. In terms of like Lithium Royalty Corp, we had initiated on the company a few months ago when it began trading. It was one of the only IPOs in the lithium space. Obviously, a different royalty model. I think for now they have several projects that are coming online in 2025-26. Their royalties are heavily exposed to many of Winsome Resources projects. So certainly as like Adina and Kansas, in addition to Sionis prospects like Moblan, I think it's as you monitor those and progressions towards commercialization, so too will lithium royalties, fortunes rise there. But in the short term, right, it's the stock is still going to be highly correlated to spot pricing. It's a royalty distribution model. You've seen a couple of attractive deals that they've done this year. I think one of the largest was Das Neves in Brazil through Atlas, which they have experience down there with obviously Sigma and Grota. So I think the combination of, you look at the portfolio they have today, which is ore processing at Mount Catlin. They've extended the mine life there, which means that cash flows are going to be extended for several more years for LIRC. You would also obviously have Core's Finis project, and obviously the content there was a bit delayed. And then you have Grota de Cirillo, and I think that shipment was delayed as well. So a little bit of just the things moving slightly to the right. But I think that the real things to monitor there, I think, as we think about how you value that equity, is the net asset valuation associated with some of the projects they have significant royalties in, like Winsome Resources portfolio and like Sionis.
Great. And Lithium Americas?
Yeah, I mean, so obviously LAC's split right now. You have early works construction at Thacker Pass. I think the expectation is that you'll have a conditional loan guarantee at some point from the Department of Energy ATVM loan program. I guess the separation should take place formally in October. You have Caucharí, I think, which we discussed earlier, which is now producing with first production. And I think like our split right now is when you look at sort of the NAV, is the NAV for Lithium Argentina or Lithium International would be roughly $28 a share, whereas the NAV for Lithium Americas, which would be obviously Thacker Pass and then their interest in green technology metals, is roughly $15 a share. So, there's quite a bit of a discrepancy in valuation, but that's really going to be related to producing assets today in Argentina and certainly having pre-producing assets in the United States.
Great. Thank you. I think we've been recording for an hour or so, so let's leave it at that. David, thank you once again for joining Rockstock Channel for this lengthy discussion of the quarterly results. Valuations are cheap, right? And the demand and supply backdrop is good, in all of our opinions. So not investment advice, but continue to sharpen your pencil. A lot of companies we talked about here are worthy of doing your own research. M&A, I think, was going to feature very significantly. There hasn't been that many capital raises, right? So when stocks are depressed, this just like delays the supply kind of coming on stream over time. You have a company like Lithium, right? To the extent that there was anticipated supply there. I don't know what's happening, in Mali, but you have yet another African story that's been in trading halt for, a long period of time. So anyhow, we remain bulls on the lithium equity space, and, dips are typically followed by higher love. So going back to Steve Winwood, I'll conclude on that note.